Please excuse me for wanting to remain anonymous, but I do not like to put a lot of information out on the web. I am a fairly private person. I'm making this video because I've been trading for many decades, and I see a lot of people who are stuck home following COVID trying to make money day trading, and unfortunately a lot of them are losing a lot of their savings. I wanted to show you the technique that I didn't develop, but that has culminated in me making consistent profits. This technique involves a series or a sequence of events that have to occur before I enter a trade, and another sequence of events that have to occur before I exit a trade. I've got several examples to show you just to help illustrate my technique. I have to take a step back and say this is not actually my technique. This is a combination of three techniques developed by other people. The first technique is called the Way of the Turtle. It's a book that can be purchased and reviewed. It's a book about commodities traders and how they made millions and millions of dollars over years trading a simple technique. This technique is the cornerstone for my trading style. I have modified this a little bit with several other things. One is I modified the trade entry point. I'll explain that in a minute. And the second thing is it appears that the most successful traders are all trend followers. Now, I'm sure there's exceptions to this, but I wanted you to know that, in my opinion, that's where the money is made. So, without further ado, I'll show you today's trade and explain why I entered the trade and why I exited the trade. So, first of all, I'm a breakout trader. I look for breakouts. I only take breakouts. The reason I take breakouts is twofold. Firstly, when there's a breakout, there are a number of people who are either have placed stops above a short position or stops below a long position to exit them from trades before they get hurt. These stops get triggered on breakouts, and as a consequence, those sellers need to buy or those buyers need to sell, and that propels the price away from your entry point rapidly. This allows you to have a very high risk to reward ratio, which is the cornerstone of being profitable. As you can see in this trade, I entered it on Friday, and the setup is very clean. As you can see, we were in a trading range since early September, and we've been bouncing around in that range since then. So the first part of the entry is triggered by a breakout of the trading range, which is this yellow line on the top here around NASDAQ 11,595. The second thing that's important is I use the Ichimoku to help me enter or stay in trades that I've entered. One of the important things about the Ichimoku is the trend follower, and it shows support and resistance lines. So if you study the Ichimoku, you'll see we're above the cloud, and we've also broken above what's called the baseline. These are both very positive things from an Ichimoku perspective. The third confirmation I must have is I use the Way of the Turtle technique which means we have to have a 20-day high in order to make an entry into a trade. If you look here, you'll see there's a says slow long, and there's a blue arrow. That's the indicator that's available on TradingView that shows your entry is confirmed. I was a little late to this trade because I have other duties, but I entered the trade long at NQ equals 11,682. The stops are placed based on the average true range, and that stop is placed 2N below the entry point. You'll have to read about that to understand money management. That's another extensive subject. Following this trade, the market moved higher and closed positive for me on Friday. Early this morning, the market took off again, and I see a lot of moves before the market opened, usually around 6 a.m. Eastern Standard Time. And as a consequence, it moved up rapidly away from my entry point, and I stayed in the trade. As the trade progressed, it went parabolic. And when trades go parabolic, a lot of times it's very important that you consider taking profits or at least raising your stops. In this case, as the trade went parabolic, I raised my stops up to 12,076, which was then, as the market came down, it hit my stop, and I was stopped out at a very good profit. This is one example. I want to show you several others. Another trade that I took I wanted to show you was from early Friday morning. In this trade, this is silver futures. Silver futures have been slowly grinding higher, and according to the technique, when we break the most recent high, we consider entering the trade. The triangle is as you see here. We broke the trend line of the triangle, and I entered the trade at 24.46. We were above the cloud, and we were above the baseline. Shortly thereafter, we moved aggressively higher, and as you can see, the Way of the Turtle trading indicator showed an entry at this point. It moved rapidly away from my entry point. I'm in profit, but I haven't reached a point to close the trade, so at this point we are letting this one run. Here's another example of gold trade that I took, and I wanted to show this one. This was on a daily chart rather than a 4-hour futures chart, and I want to again show you the technique that I use. So as you can see, we need 3 indicators to line up. The first is we need a symmetrical triangle, which you see here. Second of all, we need to be above the Ichimoku cloud and the baseline, which you see here. And third, we need confirmation from the Way of the Turtle trading technique, which is a 20-day high. You can see the blue entry point right here, and that entry was at 1762. The Ichimoku and the turtle technique kept me in this trade. This trade continued on up, and it continued until August 13th. Actually, it was earlier than that. It was August 11th, where it stopped out after it broke down at this point. Subsequently, again, the triangle set up, and again, the this time it was a short on gold, And as you can see, the way of the turtle indicated to go short at 1919. I did not take this trade, but had I taken this trade, again, we broke through the baseline. We're still in the clouds, so that's not as good an indicator. The turtle technique is indicating we go short. And if you had gone short, you would have closed out at 1882 and made a net profit there. I did not take that trade. I'm just indicating to you the technique on this one. I did take this trade. I have developed these trading techniques after several years, and they work for me. Many people have their own techniques, and I don't detract from them, but I want you to know that this is one of the techniques that I have found that does make money. I hope that you will have good luck trading, and I hope that you would read the book, The Way of the Turtle, and learn about their techniques to help you have better trading. I thank you for your indulgence.